Good evening, everyone, and welcome. A solid bounce-back rally on Wall Street today as strong corporate earnings from a pair of big blue-chip industrial giants helped erase all of yesterday's losses and then some. Not even a spike in initial jobless claims or a new possible but unconfirmed case of Ebola in the U.S. could dampen investors' appetites for stocks today. It turned out to be one of the best days of the year for equities. At the closing bell, the Dow was up 216 points after briefly seeing a 300-point gain. The Nasdaq higher by 70, and the S&P 500 added 23. Bob Pisani now with more on what was behind today's rally from the floor of the New York Stock Exchange.
Stock stage another impressive rally today. What exactly is going on? Well, there's two factors that seem most important. First, there's earnings. By the end of the day, almost 40% of the S&P 500 will have reported for this quarter, and the numbers have been very good. Today, for example, strong reports from 3M and Caterpillar and Union Pacific lifted the industrials and the transports. A strong report from Diamond Offshore lifted oil drillers. Excellent reports in the automotive space from Group 1, Dana, and O'Reilly also lifted that sector. Now, one important point, the commentary on weakness in Europe has not been as dire as some feared. Weakness in Europe has been mentioned by a number of companies, but the concerns have been offset by comments about strength in the U.S. or even in China. The second factor is hedge funds have been forced back into the market. In recent days, they have been very active buyers. Now, there's several other factors that were helpful to stocks today. First, oil has stabilized in the low 80s. Second, China's manufacturing number was slightly better than expected. Third, there's some relief that the terrible incident in Canada yesterday appears to be the work of a lone wolf. Finally, news that a New York City doctor who had been treating Ebola patients in West Africa had been taken to a New York City hospital with a high fever knocked about 80 points off the Dow's 300-point rally in the final hour of trading. It's a very good reminder that concerns about Ebola have not gone away, but it's also a sign that the market may be becoming a bit more nuanced in its reaction to Ebola stories. I mean, let's face it, if this story would have happened 2 weeks ago with the Dow up 300 points, it's likely the Dow would have dropped 200 points, not 80 points, on this news. For Nightly Business Report, I'm Bob Pisani at the New York Stock Exchange.